So let's talk about a very important topic. I talk about it all the time. S Corp status. You might hear that S Corp status is the status that you should reach, right? LLCs are a business designation. S Corp is a tax designation. So what is the difference? S Corps do not pay self-employment tax. And a lot of times people want to designate S Corp because they don't want to pay self-employment tax, which is a sunk cost, right? Once you pay it, that's it. There's no deducting it. That's just the way it is. However, with S Corp, you don't pay self-employment tax, but you do, as the owner, have to put yourself on payroll. Not sending money from your business account to your personal account. That's an owner's draw. You have to actually put yourself on payroll, pay employer taxes, and have the taxes taken out of your check, receive a W-2 from your company. The caveat is you have to put yourself on a reasonable salary, right? So in other words, a lot of times businesses, and the IRS caught on to this, right? They'll pay themselves a meager salary just to avoid self-employment tax and pay minimal employer taxes. And the IRS says, no, that's not a reasonable salary. So what is a reasonable salary? A reasonable salary is comparable to other businesses in your industry with like-kind sales. How do you determine that? In the Tax Strategies Mastermind, we use a site called BizStats, BIZSTATS, and you can easily look at the benchmarks of the percentage that is paid to you via your salary on owner's compensation as it relates to your sales, right? And these are averages, so it's a good site to use because it's reputable. And another thing I want to address is a lot of times people will say, well, I couldn't afford to pay myself a reasonable salary at the beginning of the year, but now I can. Towards the end of the year, I see that I made a lot of money in this quarter and now I can afford to pay myself. You can run back payroll. You can elect S Corp status by filing Form 2553, and you can run back payroll. You can also file S Corp in the following tax year when you actually file your tax return, okay? And you can ask your preparer or CPA about that. You can either send in the 2553 form as you run payroll, or you can do it during filing season and elect to have S Corp for that year, right? For January 1, 2025, say. If it's the end of 2025 and you want to run payroll, you want to run back payroll because now you can afford to pay yourself and you want to elect S Corp status, you can do so during filing season or immediately. Again, you have to run payroll and it has to be a reasonable salary. So yes, you can run back payroll and designate S Corp status. And employer taxes are tax deductible, unlike self-employment tax. So the goal is to start out as a sole proprietor. Once you gain your operations, a footing under your operations, you can LLC, right? Because now you want to separate yourself from the business. And then once you get enough activity going in income, you want to dedicate or designate S Corp status so that you no longer have to pay a self-employment tax, but you are receiving a W-2 from your own company. That is ordinary income. And if you follow me, ordinary income cannot be left on the table. So now you have to talk to the tax code and move that income within the tax code to business and business-like activities like real estate or other business ventures, or pump the money back into your business. This doesn't mean you never receive any money. It just means you spend it in the blind spot of the tax code, right? The blind spot of the IRS tax code. And so that's how people build their wealth in 12-month periods, because that's how the tax code operates, in 12-month intervals, calendar year, January 1, 12/31. All right. So if you want to learn more, go ahead and tap the link in my bio, join my free live training, or join the mastermind. It is tax deductible. So if you're looking for something to lower your tax liability, it's a good time to join. We have a private community off of all social media platforms on which I do group coaching. We also have yearly meet and greets. So join now. It's tax deductible, and check out the city and state for your meet and greet so I can see you.